Hello everyone, very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of JForex Indicators Explained, we will be looking at one interesting indicator named as Darvas box. This is a indicator which was developed in 1950s, where its developer thought that if he is able to figure out the momentum and a method to take advantage of the breakout along with the momentum, then he will be in a position to optimize his trades and profit from this continuation of the trend, while at the same time be able to ride out the sideways trend where the underlying instrument doesn't really move anywhere and it simply continues to remain sideways. So this is one such formation which you can safely utilize to look for the trends and the breakout therein. So let us now head to the JForex 4, the newly released trading platform from the Dukascopy Bank SA. This is the USD JPY chart with the each candle period defined at hourly. To add this indicator, all you have to do is a quick search. If you simply type in the name Darvas, you will come across this indicator. Here it is, Darvas box. Now, from this, you can make an informed guess that the trend for the USD JPY was bearish. Now we are seeing of late the signs of a possible break on the bullish side since it touched around the 138 levels and this break on the lower side. The USD JPY turned bearish and it found some support closer to the 133.50 levels. From there on, it has rebounded, but it hasn't really risen much, and it has been simply consolidating with this range of around 200 pips. Now, in today's trading session, we are seeing some renewed buying, and it looks like finally we might be seeing the end of the bearishness which has been prevalent for last couple of trading sessions in the USD JPY. If we look at the price trajectory of the USD JPY in today's trading session, after the release of some data from the US, we saw this sharp move on the upside for the USD JPY, which resulted in this breakout above this higher line top of this Darwis box. The concept of Darwis box is simple. It is joined by simply taking into consideration the recent swing highs and swing lows. If the underlying instrument is rising, then we consider the recent swing highs, which are of course higher and higher, and we join them to get a horizontal line drawn on the chart. And as there is a further breakout on the bullish side in the continuation of the underlying trend, which is bullish, we get these optimization levels as we have to buy on a breakout and keep the stop loss fairly sharp. If we get the signs of a breakout and sustainability of the price around those levels, then we simply have to place the stop loss near these immediate breakout line, the top line of the Darwis box. So your stop loss is going to be fairly sharp, and if you get to the trade where the continuation of the trend is happening, then you can ride that trend and profit substantially. So the risk reward ratio also works out quite favorably. Let us look at some of the examples. We will have to go back in time. Here we had the USD JPY breakout around the 135 levels, and then that trend continued for next couple of sessions. So here we had this classical situation as per its classical use. If we look at this consolidation which was happening inside the Darvas box, and then as the momentum used to pick up, we get to this point where there is a breakout on the higher side, and this is our entry point, and the stop loss needs to be kept somewhere near this line, so not much is going to be your stop loss. You get a fairly sharp stop loss, giving you a excellent risk reward ratio of more than 1 is to 2, and then you can hope the trend to continue, and as there is a price move on the higher side, you can revise your stop loss. If the trend continues with the strong momentum, then you will be able to profit substantially. And if, for example, here, if the trend doesn't really push the underlying instrument much higher and it again turns that sideways, even in that scenario you will only see your revised stop loss being hit. So either way you won't have to suffer much losses, and in the eventuality of the breakout proving false, your stop loss is going to be sharp. So in all these possibilities the loss is going to be quite limited, whereas the possibility of profiting is substantially higher if we get this trend to continue its ongoing trajectory. So all you have to do is watch out for the price moves on the higher side when we have the Darvas box making higher highs and higher lows. For example, if we consider this price trajectory here, we had this breakout multiple times. And in all these instances, you would have been able to profit quite well in these USD price moves. As the price trajectory turned bearish, we would have needed to wait for the Darvas box to make lower highs and lower lows, which it eventually did make. So here we had this lower lining, and if you had gone for the execution of the trade after this breakout on the lower side, you would have profited substantially, almost more than 100 pips on the lower side, as there was this sharp move on the lower side for the USD So we have seen both these cases where the underlying instrument was bullish at some points in time, whereas bearish in others. So we were to profit in all these scenarios if we were to rely on this Darvas box. And the most commendable feature for this indicator works out to be its sharp stop loss defining mechanism, as that reduces our risk while also giving us the ability to profit substantially if there is a big move in the in if there is a big move in the trajectory of the trend. Let us try out the Euro USD and see how things are shaping up there. It's taking some time. All right, here we are getting it. Now for Euro USD, the momentum has been bearish since it made and turned the corner around 1.1 levels, 1.11 level. From there on, things have turned bearish. As you can notice from this price trajectory of the Darvas box, we saw these lower high, but not exactly a lower low. Here it is now a lower low. We had a bearish formation on the Darvas box, and then this breakout here. So if you had gone for a short sale trade, you wouldn't have profited much, but of course profited you would have been anyways, but only small profit in first scenario, then substantial profit in second scenario, and again this third profit making scenario would have unfolded for you if you were to rely on these Darvas box breakout theory. So you get to know on which side the breakout is happening and also the prior trend, so you can then use this combined data to decide whether to go for a trade or whether to simply sit on the sidelines. So that is the beauty of this indicator. Now let us see what we can do in terms of the customization. This is the edit indicator option. Let's see what we are getting in terms of the customization options for this indicator. Give me a couple of more seconds. It should respond. I don't know why it's taking so much time this time around. Alright, it's not responding. This is a Darvas box with the default parameters of 100. The calculation period is 100. So the swing period, you can say the calculation period over which the swing highs and swing lows are being taken into consideration to get us these levels of support and resistance. So whatever is the recent high and low in these last 100 candle periods, that is being taken into consideration for defining these Darvas box. These we can vary. If you feel that it is not responsive enough, you can reduce it, say for example to 10 or any other calculation period, and it will become much more responsive as its calculation horizon is reduced. So you will have to carry out the observation and see what kind of calculation period is going to serve your purpose well. The output you can go for different color combinations. So all these options are there. Styling, width, and transparency can also be varied. There is not much in terms of the levels which we can safely define for this indicator. Recalculate on new candle only. You can go for this, and it is not going to make much of a difference as the calculation period is higher. Defaultly it is at 100, so last candle is not going to be of much importance. Highlight the time period zone. Whatever is your calculation period, it will be highlighted. Calculate from custom data. You can go for these further customization. You can use the instrument from the chart, or you can define it independently. The candle period can also be same as from the chart, or you can vary. So all these options are there. Suppose even if the chart is of the hourly candle period, you can vary the calculation period where you can use the candle period of a different value. So 100 candles of 15 minutes each will be taken into consideration to draw these Darvas box, whereas the chart's candle period still remains at hourly. So that's how this formation works. Let me now revert back to use from the chart. You can go for these two options of ask and bid, show indicator on all the candle periods. So whatever is your chart's candle period, on all those candle periods the indicator will be available. Else you can specify on which particular candle period you want this indicator, and only on that particular candle period the indicator will show up, and whereas if you change the chart's candle period to other candle periods, there won't be any plotting of the Darvas box. Base period is not going to make much of an impact for this indicator, so you can try out all the combination, but it is not going to impact your plotting. So that's all from my side for today's session of the JForex indicators explained, where I try to explain to you the concept, the utility, some representative examples of these Darvas box indicator, and I hope you have been able to understand these easy to understand, easy to use indicator, which is quite reliable to figure out the breakout in conjunction with the existing trend, so you get to know what is the existing trend and also the levels which you should watch out for. So it serves multiple purpose, and that is the beauty of the indicator. So do give it a try, carry out various observation and see how it performs in the market, how you can define these trading scenarios where you can increase your profitability. So do try it out and carry out observation over a long period of time, and in that you will find quite good examples of how to use it, and you will be future ready. So that's all from my side for today's session. Do write to me in the feedback if you have any idea or any query to share. I'll be back next time around with a new indicator in a new week. So see you on Monday. Goodbye.